There you are.
Good morning.
Good morning. Have you named your bird of paradise yet?
No name yet. I'll have to think of something.
Awesome. I also like what you've done with your hair. It looks like salons have opened and you snuck out.
Yep, things are back open, so I went for a wild change and Ryan got his haircut too, so we're going for the shorter summer vibes, I guess.
Gosh, I don't think we call Ryan a kid anymore.
No, he's like a big man child now, and I think I haven't posted a bit about him personally. So post COVID, he's been in and doing workouts and eating healthy and just growing at crazy amounts.
Yeah, it's crazy. I think when you joined, I still remember, Ryan in my head is Ryan like the Little League baseball player. And, just seeing the photo of him yesterday, being almost like half a head taller than you, it's, oh my gosh, is that Ryan?
Yeah, it's crazy. Our sweet little innocent boy who is baseball is now our, tall I'm taking advice from him now.
I don't need to ask about what. I'm a little afraid, but I did want to get on this call with you because you had such great insights about the market. I mean, we started this usually in January. It's a little sleepy, right? Everyone's kind of waking up, coming after the holidays, and then right about what is it? We're already in February. It's crazy that January is already over. I mean, market kind of wakes up like second week of January, and then we don't really get into like a busy mode until after President's Day weekend. And it just felt like it was nonstop. The minute January 1st hit, we're at a full-blown sprint. And I know you're constantly working out with buyers and you're working with sellers, you're prepping things, and and I'm actually really amazed. You're an incredible mom, you're incredible, housemaker. You moved during this process, got a bird of paradise, homeschooling Ryan, and doing all the stuff for your clients. So I figure if you could do all that, I definitely could do more. But let's talk about it. The market's crazy. What is fact and what's fiction? I mean, we're seeing hundreds of showings per home, right? I want to get, why is that happening? And it seems like buyers think they have to pay hundreds of thousands over asking for properties, and we kind of want to know why that is as well. So, is that something to shed a little bit of light on?
Yeah, so I think first we got to break it down into a few sections, that the timing of the market and where we're at. The last couple of years, we flew through the winter. As you remember, I don't even think we celebrated holidays. There was no holiday break. The mentality around here in Silicon Valley is work, work, work. And COVID was kind of a shakeup in a really good way for a lot of people to quote unquote stop and smell the roses, to take time with your family. The holidays on a calendar are there for a specific purpose. They're not just taking up space to remind you that you have to buy gifts for everyone in your family. They're a mental break and a focus, a recharge. And I know I've talked to you about the importance of our Eagle Lake trip, that in the summer we take 2 weeks, probably not the best of time because summer's pretty busy as well. But that time to reflect, to kind of recharge, to be around family, that's what the holiday break is for, regardless of kind of what you celebrate, your views. It's everyone taking time to step back and feel okay with not being okay with work. I had a hard time with that. We talked about it, that I had this guilt of stepping away from the business. And we can get off on another subject with that later, but
I definitely remember you were, it wasn't the most present Eagle Lake trip for you.
Right.
You're really worried about your clients, and I think you actually came back a day or two early because just market conditions. That really kind of shows your dedication to your clients and your perseverance in whatever you need to do to make sure your clients have the best experience. You're right there for them.
For sure.
But we keep hearing about this mass exodus from Silicon Valley. What are you seeing?
It's interesting because you heard the moving companies are crazy to get a hold of. Everyone's leaving. I've had quite a few instances of people either coming back or moving into the valley. Why? Because we're sustainable. we keep our business going. It's really sad to see, what the country's doing with COVID, and there are a lot of unfortunate circumstances. But as far as our housing market, we kept rolling through. We have super low interest rates, and there's actually quite a few new first-time home buyers who are able to afford here, that we're not seeing that big push of investors that we saw years prior, where investors are buying the property, whether it's a flip or to rent it out. We're seeing people want a better quality of life. They're either moving out of a condo into a single family home. Just better quality of life has become really important. With that, we've gotten a ton of activity that right now, the showings and the bookings are starting 8 a.m., finishing up at 7:30 p.m. Contrary to my own advice, I'd never taken clients in the dark to see a home, and we're having to jump on those appointments just because if you don't see it, you can't buy it. So
Should we go ahead and get headlamps for your clients?
The headlamps I have in my camping supplies, I'm starting to think we need to brand them and give them out as gifts.
We could do that.
Yeah. But yeah, it's a really interesting time that it takes a lot of confidence to work through this market as a buyer or as a seller, because there's so much going on. There's so many new licensees. There's a lot going on with the bigger players in the tech, the industry, the Zillows, the HomeLight. There's a lot of different services that are coming up that we really need to understand and educate our clients on where the market's going at every turn, because from one week to the next, it could be totally different.
And this is really why I wanted to get you on this call, because there's so many newer and inexperienced agents, as well as buyers having a FOMO. Like, if I don't buy now, there's no inventory, I'm not going to get into a home. Tech companies have also drawn the line in the sand. It was, you guys are coming back in June 2021. Now a lot of it's pushed to September 2021, but the writing's on the wall and it's clear. We want our employees back. And last year in 2020, there was this great big pause, right? Go work from home, work from anywhere in the world. People did that, and they realized it's actually not all that cracked out to be. A lot of people have missed the camaraderie, the water cooler talk, and the social aspect of being in the office, in addition to how productive they can be among peers, right? When they're disconnected from their children and family and loved ones, right? And a lot of people realize they need that distance, that separation, and that balance. But coming in, we realized that demand is way up here and we have all-time low supply. And that's really what's causing the mass bookings and appointments. And also because it's a January market, January appraisals usually always come low. It's 30 days for appraisals to catch up and get current market value. So you're seeing people bid hundreds of thousands above asking. And we do project that homes are actually going up double digits this year in Silicon Valley. I think 10.9% is the expectation. But this is where the value of working with a seasoned realtor comes in. You and I have gone through these markets. We understand that this is temporary. In the big picture, you have these big waves where if you stretch it out, it's pretty even keeled. What are you telling your buyers that are getting bid out and can't put in aggressive bids right now?
Yeah, so believe it or not, I have actually talked several of my clients out of homes. I love a competitive market. I love, giving them stats on what they should be paying for a home. There's a point where it becomes reckless, and throwing your client with a non-contingent offer to just win for the sake of winning them the home down the road, that doesn't feel good for anyone. So what we're talking about now is we're out doing our research, we're touring homes, if it's interesting to you, we're looking at it, we're looking at disclosures, we're even going forward and writing the offer, but we are checking in with them for their threshold. I just want to know from you, do you love this home? And are you willing to pay X for the home? If that's the case, let's submit our offer. Let me do everything I can to talk to the listing agent to get you that offer one. But at the end of the day, you need to feel good that you missed out on the home for whatever reason. And also that you didn't overpay for something and have to back out of contract, because we know that appraisals are behind. And if your house doesn't appraise for that value, the money needs to come from somewhere.
Right. And it's really, I think we coach our buyers, from a 1 to 10 scale, right? Where are you on this home, right? And people normally write offers if it's like a 7 or above, right? 7 is, Adrian, I really like the home. I could see myself in it, but I'm not like fully in love with it. And when I walk in, it's not like, wow, right? And we have the misconception of people just buying dream homes here in Silicon Valley, and that's really not the case for most people. You have starter homes, you have move up homes, and eventually, hopefully, you get to something called a dream home that's a 9 or a 10. But based on that number, it's how aggressive we write that offer. Um, and and if they lose out on it, they have to be okay with that. But also, if they write the highest and best and they're willing to overpay for it, if that is a 9 or 10 home, what's your advice on that? If, Adrian, I really love this home. It's a 9.5 to 10. This is the home I know I belong to, and I could afford to write, 400,000 over asking for this property. Is that reckless, or is that something that? How would you guide me on such a scenario?
Sure. So looking at your individual picture, if you're able to afford that and it is your long-term plan and you're planning on being in the home, what is the value really? Because we have the luxury here of homes appreciating quite quickly. And to be honest, as a buyer, unless you're an investor type buyer, the appreciation is going to happen over time. It's kind of like it's comparable to being in the stock market. There's people who want to get in, find the best stock to cash out quick, and then there's people in it for the long haul who are investing in a variety, and they're just riding through, and they're going to track it, but it's in for the long haul. So if you're the long haul person paying 400,000 over asking price, there's a lot of different background scenario of how the agent got to that price. So maybe it's worth closer to that 400,000 over. But if you're not at that point in your life to afford that luxury, or you're on the 2 to 5 year plan, maybe till your kids start kindergarten, we're going to look at homes that have your specific floor plan or whatever it is you're looking for. Maybe they're a little more updated, but we're going to give you the resources to find out how to get that home up to that over $400,000 list price home, because of the qualities that and the finishes that contractor put in. So it's really appreciating each style of home. And if that's your look, hey, we're going to point you in the direction of who needs to make it that way, and do projects at a time. So there's always an option for everybody.
I love that. I think the two takeaways I had, first and foremost, not something that I mentioned, I just kind of grabbed, but first step is always having a dialogue with the listing agent, figuring out seller expectations, uncovering, things that are not intentionally, not that they're not disclosed, but really doing the homework, going through the disclosures, walking through the home, figuring out if there is any outstanding items that could be used as a negotiation point, or that this home is worth more or less, but you kind of really extract that for your clients. The other thing is, if I'm paying 400,000 more, it really depends on that price point. It's probably not something you want to do on, I don't know, like often if I'm paying $400,000 over, that means the home is probably severely underpriced, meaning the actual value is probably 1.2, 1.3. So I'm not paying 400 over. I'm probably paying 1 or 1.5 over, 150 over, just to get in the home. And if I stay there 5, 7, 10 years, you're pretty confident saying, Wallace, if you don't touch the home, if you just maintain it, in that time, it'll appreciate and you're not going to lose out on your investment. The hedge that you brought up, which I enjoyed, is a lot of people don't buy their dream homes, but they buy homes that need work. And you kind of walk your clients through, well, if we did this and we did that, and we added value, we definitely bring that price point up in a rapid process. Did I hear that right?
Yeah, that's very true. So it's getting, the point being, we need to go through and do the research and read through all the information and be extremely transparent with our clients, because getting the thick stack of reports, we're seeing all this information, we're seeing numbers, we're seeing estimates, and it can be intimidating to anyone. I've got clients who are on their second or third home, but maybe 5 years have passed. And in those 5 years, rules, regulations, so many things have changed that everyone needs to be up to date, and you need to feel confident in whatever purchase you're making.
Right. So that being said, it is a strong seller's market right now, and we have to write really clean, really aggressive offers. I may not be in the scenario where I could pay all cash. Is my financed offer still competitive? And what are a few things I could do with my finance offer to make it as competitive or more competitive than cash?
Sure. So hard money loans, when we used to think of hard money 10 years ago, I was thinking of like the shark at the pool game with his sunglasses on and a cigar sticking out of his mouth, just shadily handing you money under the table. And now 2021, even 2020, they've really transformed hard money loans, and hard money lenders are becoming almost as common as the conventional lenders, meaning they're able to take the equity of your current home, pull different finances to give you that cash as an option. You're still going to be paying quite a high interest rate on the backside, but there's a temporary fix to be able to borrow that hard money, go in as an all cash offer, which sometimes could win you the house.
It's just a bridge loan, right? So they're able to, they're normally 30, 60, 90 days. They're a little higher than prime, but the notion of a shark by the poolside lending money has changed because hard money has been heavily regulated. They can't just charge 20% interest anymore. So it's more like, I think current rates are 6 to 7%, which is actually not too bad. But that allows them to write stronger offers. But also at the same point, I don't really see cash. Cash is always super clean, especially if it's non-contingent, because we could close in like as early as 6 or 7 days. But it always depends on, it doesn't mean there's a cash discount. If your offer is competitive or higher with the right terms, and often we educate our clients, the deal is often won on the terms, but the pricing has to be there because most sellers can't afford to wait another week or two for the loan to fund, right? And regardless, they are walking away with cash, whether it's out of your pocket or the bank's pocket.
That's right.
And the last kind of question I want to walk you through is really kind of demonstrating the value that you bring to your clients. After being in the business for, decades and doing hundreds of transactions and seeing the entire valley change. I know things seem pretty discouraging to home buyers right now, but what are parting words of wisdom?
Sure. So parting words of wisdom. That put a lot of pressure.
Like I'm frustrated, right? I can't buy a home. I'm constantly getting bid out. Adriane, are we ever going to find a home for me?
Right. So the great news is that we are seasonal. Everything goes through the season. There's the ups, there's the downs, and there's always light at the end of the tunnel. That right now it's competitive. As we get towards spring, it used to be when open houses were still open houses. After Super Bowl Sunday, that was the indicator that we would hold our clients off because January typically was kind of slow. Come Super Bowl, after that week, we would just keep seeing more and more inventory pop up. And I don't have my crystal ball with me today, but knowing how the market typically works, we're going to start seeing a lot more inventory, which will level out prices. It doesn't mean that there's going to start being discounts or you're going to magically get into the house that you've always dreamed of, but it makes it a little less competitive and easier for a buyer to be able to get in to a home. And it seems like interest rates should be staying pretty good for the next few months.
Yeah, we don't expect interest rates to go up. They're still at an all-time low. I mean, I get it. You're no longer getting at like 2 3/4 or 3%. It is indexing up to 5, but I have to remind people, when I bought my first place, interest rates were much higher. When my parents bought their first place, it was double digits, right? So we're all-time low. And yes, home prices are at an all-time high, which kind of equalizes things. But fear is not, hope is not lost. And if you're feeling FOMO and you're feeling burnt out in January, I think our best advice is walk away from the market for like a week or two, reset, enjoy Super Bowl Sunday, enjoy President's Day weekend. And after that, we should see an increase. If history proves right, we'll see an increase in inventory. We'll see the same amount of demand, which means they'll be closer together, meaning there's more to look at. It's less competitive, and you're still going to be paying market because it is still a seller's market. But we could probably get you into a home as long as they listen to wise words.
Right.
Well, thanks for joining me, Adriane. Hopefully this was insightful for all of you watching. And before I go, how do people get a hold of you?
You could visit my Instagram. It's probably the most fun aspect. If you go to Adriane Alston Homes and my Adriane.co, which if you want to, we'll type that in somewhere so you could spell my name properly, since my mom spelled it really unique. But yeah, the website or a phone call, I'm as quick as a phone call or a text.
We'll drop it below. I'll make sure you get Adriane's information. Thank you for joining me, Adriane.
Thank you.